Good afternoon, everyone. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is March 27th, 2024, and we're going to talk about NVIDIA's double top formation and its impact on everything. To start out, let's talk about the NVIDIA double top formation. A double top formation, or any formation for that matter, needs to be able to create its highs, its lows, its support, its resistance, and then clear it for it to be a true pattern. So as we're watching this, you can see multiple patterns through here. Some potentially developing. If they don't clear the lows, they're just really not a pattern until they break through the lows or the highs. So this double top formation that is being created, we had a gap up here, a new record high, and that open price was $951.38. Over here, we gapped up to $958, a little bit higher than this, but I would argue it's still a double top because it's close enough as far as percentage. The shadow wasn't breached. And so therefore, if we get through the low down here near 850, we will complete a double top type formation. Now, the double top formation here should have us looking at this pattern repeated. And even if we don't go up to the highest shadows, when you kind of stick to there, we're talking about a $100 move lower. And if we look at where that $100 move lower is and tie it back here, that's the previous highs with the gaps and earnings driven play. So we've now gone past all the hype of their little 4-day summit. We've seen all the changes and all the adjustments, and the market still isn't buying into this. Now, the formation of a double top is created by the very concept of a bunch of buyers that have pushed it up to a level, a pullback that was unexpected, a recovery up to that level, and in essence, a bunch of traders, a bunch of buyers saying, I wish I would have got out here before. And so when we get up there again, we're getting out. So the sellers that didn't get out here before are getting out here. And so as they sell off, all the people that bought down here are going to be overtaken. And a bunch of the buyers that bought all the way through here get out of that top piece, and we break through and we accelerate. So that being said, NVIDIA has been driving equities, especially tech stocks and AI stocks specifically, higher and higher. So if NVIDIA does complete this pattern, it's not just a matter of a $100 move. The question is, if we're seeing this, and we're going to go off of this close here, we'll treat this as the price and this close as the price. If we're looking at that move and we do this as a percentage of the move, we're talking about NVIDIA dropping, one, from the high 10%, and two, dropping from the high 20% just to complete the pattern. So from the extreme high to complete that pattern, we're talking about a move of about 21.5%. Is that the same replication that we're going to see in the NASDAQ? Let's go over to the NASDAQ, and we'll start with the QQQ. If we look at the QQQ, the first thing we're going to notice is correlated to the NVIDIA, we're at 82% correlation. Now, that does not mean that NVIDIA drives the QQQ 82% of the movements. No, they mean that they move up and down together about 82% of the time. And you can see that they've been very highly correlated for the last 6 months. And if we zoom out, or zoom to the 1 and -1 for the last 6 months, and we can go back for a year, but the correlation has been very dramatic and very positive. The ratio that we're getting, in most stocks you might expect to see if, say, Apple had some impact on it, and if Apple made up 10% of the NASDAQ, you'd expect to see if Apple gained by 2%, then you'd expect to see theoretically 0.2% added to the QQQ. It doesn't quite work that way just because it's leveraged that way. It's because it has this multiplier effect. And so when we look at the QQQ and say, what's the impact of NVIDIA, we're probably looking at about half to a third of that impact. And we could go through and look at the previous year to quantify that as well. But let's look at this from purely the price pattern perspective. If NVIDIA is setting up for this same type of price pattern, the reversal type price pattern off the high close to the low close, then we were looking for a move down to about 421. It's also taking us back to some previous lows in January. From the high shadow to that low shadow, or the high shadow to the target, we're talking about a move of about 6.5%. So roughly about 1/3 of what we've seen in NVIDIA. But that's because it's an index across 100 stocks. that could be the impact there. Let's go take a look at the SPY. It's not going to have the same kind of impact because it's spread out across 500 stocks and has less of NVIDIA compared to the NASDAQ. But let's look at the broad market with the SPY. Here's the SPY. Been trading higher highs, higher lows in the same channel arguably since November. I don't have the same double top formation, but if we're looking at this as the percentage and the multiple, if we get through these lows, we could fall back down to 500, and from that peak to 500, we're talking about 4.5%. We're not going to get the same kind of multiple in the SPY. Where the biggest impact is going to be is the other tech stocks that were riding the tailwinds of NVIDIA. A number of these AI correlated or tangential stocks are going to already see similar price patterns or already have sold off, but we want to look for the ones that are setting up for the next price pattern that we can target. Oracle is creating what I would say is a really ugly, sloppy head and shoulders pattern. Just like a double top is a reversal pattern or triple top is a reversal pattern, Oracle is setting up for the same kind of thing. The move here we would look for, and I like to go from the opens or closes to the closes, and we can worry about the shadows later, but I would be looking at this as an Oracle potential move that is going to drop from about 130 down to 124, and therefore we're going to duplicate that, and we're going to run all the way down 6 points and drop down to 118. Now, that move to 118-ish takes us back to these highs. As a percentage, when we're looking at that move, that is going to see a 10% move. A little closer to what we saw in NVIDIA. 10% and then 20%. So Oracle's pricing in about a 10% move if it can break through that low, testing back to 118. Others are looking very similar and setting up for bigger opportunities in reversals. You take something like Broadcom, AVGO, and we had a high here, a lower high, and if we break through this low, we could replicate this entire move. If we take that entire move, we're going to measure this out again, and AVGO going off the high close to the low close, and I'm going off the closes, not off the bodies on this one, and we're looking at a move from current price 1303 down to 1059. A break below that 1233 would get us on target to that 1059. And if we go from the highest shadow to the lowest price, like we did with NVIDIA, AVGO could be weighed down, go back to its previous support level, and we're talking about 26.5%. And the correlation to NVIDIA is at 89%, more correlated than what we saw with the NASDAQ. AVGO has higher correlation, tighter connected, creating a lower high, so that if NVIDIA breaks through its support level, or AVGO Broadcom breaks through its support level, whichever happens first, you may have an opportunity to see a 26% move down in AVGO, taking you back down to support, but not just a price pattern, but a true trend reversal with lower highs, lower lows, lower closes. So AVGO is setting up for a significant drop down to that next level. Super microcomputer, which has been a hot topic for a while, has created lower highs as well. Could be creating a head and shoulders pattern. And the way we would look at this is the same idea. We've been measuring from the high to the low, and we're looking for the move about 24% replicated. So this is probably the biggest of the opportunities as far as percentage goes. And the correlation broke. Correlation was up at 80, 90, 96%, 98%. And we broke that correlation when they sold off early. They bounced back up, and now they're selling off following NVIDIA again. So super microcomputer, if we're going to see this breakdown, we're talking about a target that's going to bring us all the way down to 600. And as a percentage from the high price, we're looking at a drop from the highest price it put in of nearly 52%. From the current price, if we're going to see NVIDIA break through its support, from current price, we could see 40%, and from breakout to that target, if you just wait for the price pattern to appear, there's a 33% drop in SMCI coming based off price patterns alone. Now, other big stocks that we've talked about in the past, like Google and Microsoft, aren't really creating that same reversal pattern, so I'm not going to worry too much about these. So you can see it's not reversing. In fact, it's kind of widening out. The widening pattern could be anyone's game here. So I'm not too worried about that one. So if we look at Microsoft, you'll see a similar kind of situation. I have a long way to go before that confirms the reversal as well. So we're just going to push those off to the side as they are not reacting or responding and don't have the same high correlation that we've seen with NVIDIA. However, there are still others maybe a little less aggressive in setting up that move, and that could be going back to CRM and creating a similar price pattern, but we don't have to chase as big of a move, and therefore it might have less volatility, maybe a little bit easier trade to go off of, and we'll measure from here to here. And so if we break the floor, break the support level here, we're probably talking about a 297, 280 target, which matches previous support levels. From the current price down to that target, you're looking at about 6.5%, closer to what we saw expectations would be with QQQ. And if we're going off the extreme high to the low, then we're talking about a 12%. So it's a little safer, a little less aggressive on that as far as the movement goes. But today was a pretty big day for CRM on the way down. SMH, if you want to distribute it out a little bit more across semiconductors, similar price patterns, we've talked about this, and I would be looking at target 1 here, which is about 5%. So if it breaks through there, you're going down into this area right here and looking for a move from 204. From the current price on SMH, the ETF, we're looking at maybe 8.75%. And the last one that is a little less aggressive, if you're trying to reduce the risk and spread it out across other things to take a short, would be something like an expanded tech software. Because if NVIDIA is going to slow down and everybody else slows down, then those that support it, like the expanded tech software companies, are going to be seeing some weakness too. Now this is not a double top, a triple top. I would call this a rectangle. This would fit into that idea that we've seen multiple barriers, and so we'd capture all of this and expect that to replicate from about 87 to 83. So from 87 to 83 would give you a $4 move lower and target down to 79 right into these lows down here. As a percentage, we'll take the current price, and the opportunity could be about 6.5%, 7%. So we're getting roughly the same on these ETFs, SMH, IGV, and even on CRM, that we're looking for probably about a 6 to 7% move if we see NVIDIA break through support and create a double top. That ties very closely to QQQ, and that pullback would be about 6, 7% there. If you're looking for something more dramatic, look at the bigger players, the bigger leverage that we've already talked about. AVGO is a good setup there. We talked about microcomputers as being probably the biggest move and the biggest opportunity if you're willing to trade into that. And right now, even though it's selling off, we probably haven't priced in all the volatility on those. So long puts, long out of the money puts, maybe being funded by verticals could really give you the opportunity to reduce your cost, reduce your risk, and still leverage up for a directional move. Well, that's going to do it for me today. Watch for that break of support before really acting on this, or understand your risk that you're going into it. We will talk to you again next week.